So guys, yesterday was a very bullish day and the market started from one end and closed at the highs of the day. These are also called trend days. And if I'm not wrong, market went up almost, I think, about 3%, right? So this video is not so much about what happens on a trend day or what happens when the market makes such a big move. This video is about what happens the next day, right? And how do market participants, how do retail traders approach these kind of days? That is basically what I wanted to discuss. So what happens is, more often than not, whenever you have such a strong trend day, a lot of people are caught by surprise, right? So the very reason these days become so big is because people are not prepared to have such a big trend day. So that's the reason why people are forced to cut their losses a lot of times, and then they have to take positions on the opposite side. So these days become big, right? So the first day happens to be a surprise for most of the market participants, but the next day there is a lot of chatter. People already are aware that such a big move has happened. So now two camps emerge. First camp is those of people who could not participate the previous day and they believe that this is going to continue, right? So they believe that the sentiment is very strong in this case. So they are prepared to take a long position because they want to take advantage of this opportunity. Market, if it's going to keep going up, they want to make money on the long side. But on the other hand, there is another camp which believes that market already has made the big move the previous day and they believe that today will be the day the market would come down, right? So there are these two camps who have completely opposite view. And what I have observed is that the next day, both these parties, they become very, very active in the morning, right? Everybody. So let's say, for example, you believe that market would come down, you will be happy to take short positions in the morning. And if you believe that the market will keep going up, you will be the one taking long positions. So a lot of very aggressive activities happen in the morning. And what generally happens, and again, there is no fixed rule for anything, but what generally happens on these days, especially in the morning, I'm not focusing about the rest of the day, that mornings become very messy, right? Morning becomes very messy, and today was not such a bad thing. It was basically a 50-point up and down move, but a lot of times these moves can even be 100-point moves because people who are short, they will take short positions. People who want to take long positions, they will keep taking long positions. So you will not get any definitive move, and the chances are that if your entry is less than perfect, your stop loss will get hit, right? So this is the psychology, and this is the one thing which I want you guys to avoid. The next day morning, when people are coming with their pre-defined views of whether what the market will do, whether it will go up or go down. Now, what I like to do normally is that I like to play on both sides, right? So today, for example, I played on both sides. I made money on the short side as well as I made money on the long side. And I did not have a clear view of what the market would do. And what happened was the market was in this very volatile range, and after the range got resolved on the downside. So now the market is kind of settling down. But this thing, I did not know what the market would do, whether the market will break on the downside or whether the market would resolve on the upside. All I did know was that the mornings are going to be choppy, and because the choppiness happened on a Wednesday, which is a day prior to expiry, which helps me take trades where I'm not so much making money from the direction, rather I'm making money from the expiry effect, which is essentially taking advantage of the time decay, accelerated time decay. So the takeaway, guys, I will keep it short. The takeaway is that if you already have seen a day where big positions, the market has made a big move, and next day, just be aware that mornings are going to be dangerous. Stop losses are likely to get hit very aggressively very soon, and this effect can be very pronounced in options especially. So either if you want to trade, then keep your position sizes small, or I would advise you to either stay directional neutral like in my case, or I think the best way to trade these kind of days is wait for the market to pick a direction, have some kind of a consolidation, and then the direction that market picks, it's a better idea to trade after that, right? So that's basically what I wanted to share in this video.